Welcome to the MDM podcast. I'm Vesna Brajkovic and your host for today's episode. Over the past few years, we've seen distributors rethinking their networks, not just to handle disruption, but to manage fragmented operations, rising cost to serve, and increasing pressure for visibility and speed. We're starting to see some of those responses take shape in the form of larger, more centralized, and more automated distribution models. One example is Supply Technologies, which is augmenting its network of more than 70 warehouses with a new 375,000 square foot distribution center in Union, Ohio, designed to support a more centralized, tech-enabled hub and spoke model with investments in automation, in advanced warehouse systems, and engineering capabilities. And that's what we're unpacking today. I'm joined by Brian Norris, president of Supply Technologies, a subsidiary of ParkOhio that serves industrial OEM customers with standard engineered assembly components. Brian, no stranger to take on a challenge, stepped into the head role in 2021 and has spent the last 4 years navigating supply disruption, demand volatility, and a business built through decades of acquisitions. Now he's spearheading a $50 million plus investment in the future. So today we're talking about why now, what drove this investment, what is actually changing operationally, and how the company is positioning itself as its end markets continue to shift. Welcome, Brian Norris, to the MDM podcast.
Thanks, Vesna. Really excited to be here today with you and talk a little bit about Supply Technologies.
You've been in this role for about 4.5 years now. You came in a great time during the pandemic, managed through supply chain chaos and then demand volatility, you name it. And now we're seeing that you're making the biggest infrastructure bet in the company's history, really. What did those first few years tell you that convinced you that right now is the right time to commit to this and make this huge investment?
Yeah, it definitely was a challenge when I first came in 21, 22, 23. But I think it's a couple things. First one, just learning the business. It took me some time to learn the business, and that is, sitting with our employees and seeing them do their jobs, whether that would be our buyers, our people in our warehouses, our customer service folks. But I sat alongside them and saw how they did their jobs. The second thing was just getting out and seeing customers. I did a lot of manufacturing line side walks and understanding how we serve during a very challenging time, as you pointed out. After doing those two things, and again, this is a business that was built up over the last 30 years by 24 acquisitions. And so a lot of capital was spent on buying companies and building out this platform of 70 plus locations in 18 countries to serve global OEMs. What we didn't spend it on was the infrastructure and some of our systems. So 2025 was the year that, we've decided to do a couple things. One is really invest in our IT and our systems, changing out our ERP, doing some stuff around our data and providing customers visibility into data and insights. And then cyber that we all have to invest in IT around that. And then our network. Again, buying 24 companies, we had a lot of locations, 46 locations around North America. And so having that many locations makes it a challenge to invest in automation, your systems, your processes are different. So really, those items really led us to the point that, we had to make some changes around our ERP. We had to make some changes around our distribution network in North America.
And, the announcement of the distribution center, the big announcement, it mentions robotic automation, advanced warehouse systems, automated sorting and kitting, and a quality and engineering lab. Can you get any more specific about what's going on inside this building and what's different from what you operate today?
Yeah, it's exciting. Our teams are excited about it. Again, as I said, we operate 46 locations in North America. Some of those locations are 25,000 square foot locations. Our largest one is 85,000 square feet, serving local customers. And so this is a 375,000 square foot facility with another 150,000 that we can add on a later point in time.
Wow.
It gives us that opportunity to automate where we just haven't had that quite that opportunity in the smaller facilities that we have out there. So it brings us some new capabilities, and then it automates some capabilities that we've always thrown labor at, right? And so how we
Sure.
receive in some automated receiving, some automated robotics moving product around. I think the kitting, we do a lot of toting, line side toting for our customers. So it allows us to automate that, where we've always had people doing that on toting lines with scales and other ways of doing it. Now we're investing in equipment that allows that to be automated. And really, kitting is probably one of the biggest things that we're investing in this facility that allows us to do kits for our customers, anywhere up to 20 different pieces in a kit, and
Wow.
provide that to our customers.
And operationally speaking, a lot of talk of this hub and spoke framing, kind of suggesting that this facility in Union, Ohio is doing something that the existing network of warehouses can't necessarily. So what is the gap that it's closing?
Yeah, so if you think about 46 locations serves, different customers, but it serves a lot of the same customers. So I may have a
Okay.
customer that has four different plants we serve out of four different locations. And when that happens, I have to carry safety stock at each one of those locations, not having a hub and spoke system. Having a hub and spoke system allows us to have a central location where we keep the safety stock, we move that product around. So that's one thing. The second thing is we do a lot of finishing when goods come in. It's not in the form that the customer wants it, so we have to do plating, patching, other things like that. I have to do that locally with local platers, local third-party companies, and this allows us to consolidate that down and have one central location that manages that process for us. Um, we hired a network optimization company to
Mm.
help us plan this out. And, they took a look at how we move our product around. And when they came back, it looked like a spaghetti diagram of all the product flying over top of each other. And it shouldn't look like that. So we gain a lot of efficiencies and allow us to serve our customers better by having more straight lines of product coming in and out from our suppliers.
Yeah, a great analogy. I think a lot of distributors listening to this can relate to that spaghetti diagram. Um, and you're also, mid ERP implementation. So I really want to focus on that because, that's a big one in itself. That's a lot of simultaneous change, having, creating this hub and spoke model plus the ERP implementation. So I'm curious, how do you sequence a facility stand up like this at this scale? And then also this huge, really systems overhaul without kind of undermining each project working together.
Yeah, I would say that's probably the biggest challenge. You have to be flexible. For example, we wanted to have the new ERP system when the new DC opened up, and
Yeah.
that just wasn't in the deck cards to have that. So we're going to start with our older system in that distribution center,
Okay.
and when we're ready to implement all of SAP in North America, then we will add it there. So flexibility was one piece of it. Again, I've come from Fortune 500 companies my entire career, big companies that have a lot of resources. When you come to a little bit of a smaller company, you don't have those resources. And doing two projects like this, and a bunch of small projects as well, um, you just don't have the resources. So we've had to rely on hiring external firms to help us in areas. Things like I said, we had hired Invista to help us with our distribution network and building that out. And so we've had to bring in external data scientists to start crunching data. So you rely on that. But we've also brought in, new roles in our organization that brought in expertise. We didn't have a PMO in the past. And so we brought in a project management office, and really
Wow.
making sure that the projects that we manage are done properly and you're not just winging it. So we have meetings all the times, making sure we're staying on task with these projects that we're working through.
And I want to talk about also the business environment that we're seeing right now too. I was watching ParkOhio's, fourth quarter 2025 earnings call, and 2 years ago, Supply Technologies had little revenue in AI data center space, for example, a big one that's coming up. A lot of distributors are looking at. Today, you're approaching 150 million annually. So I think that's a really remarkable shift. I wanted to touch on. And how are you serving that market right now? And do you intend to more in the future? What is that looking like?
Yeah, I mean, obviously, everybody talks about AI. I think AI was on a pack of bubble gum I bought the other day, right? So it's everywhere. And so at the end of the day, when we took a look at the diverse end markets that we served, we had bits and pieces of this. We had some electrical distribution companies that we worked with, but we took a look at the ecosphere of data centers and AI and tried to focus on that. In the data centers, you have switch gear, you have cooling, you have servers, you have the energy source coming in, which is usually
Yeah.
turbine. And so we focused on a lot of those end markets, pulling that together to tell a message around how we serve that data center market, and it allows us some scale. When you focus on an end market, it allows a lot of consistency of different parts and pieces that we can serve our customers in that area. And as everybody knows, in a super growing market like data centers, there's a lot of, I would say, startups or roll-ups of companies, and a lot of those startups and roll-ups don't have the systems and processes to do what we do. So they're looking for a partner like us to manage the supply chain for them. So that allows us to get in there and help some of these newer startup roll-up type companies in this space. But it is a growing need out there, and still a lot more opportunity, but that's how we've kind of focused on it and thought about what end markets we really want to go after.
Looking back to 2025 too, it was a year where we saw power sports, heavy duty truck, industrial equipment down, while that data center, semiconductors, and aerospace were kind of holding things up. So, how are you operating through that split of your markets, where essentially maybe we can think about it as half the end markets are contracting versus half are surging?
Yeah, I would say the hardest part about that, I mean, it's great, right? You wanted a highly diverse end markets, so while some are up, some are down, and we've been able to weather the storm on some of the end markets being down over the last 4 years because some markets were up. I think the biggest challenge for us is more the volatility. It's not that
Okay,
an end market is down; it's that did they know it was going to be down? Because again, we get
good
production
point.
schedules from our customers, and if they believe, they're going to make X amount of something, we go out and buy that material for them. And then if the volatility changes in the marketplace, then I have a lot of excess inventory. It takes up capacity in my warehouses. It's working capital that I have in the network, right? So it's more about the volatility. We've seen a lot of that over the last 4 years. We're actually at a point right now that even in some end markets where it's still at historically low levels, we're starting to see that rebound. So if you take a look at agricultural market, construction market, those have been highly depressed markets. They've kind of hit rock bottom, and we're actually starting to see a recovery from those end markets. But that's the volatility of having a diverse end market. That's the biggest challenge of managing that.
Thanks for that perspective and background. You had mentioned that you come from a history of working for, some of the largest industrial distributors and having all those resources. So I'm curious, you spent 12 years at Grainger, for example, before this role. How has that background and that leadership perspective prepared you to take on, this role at Supply Technologies, and maybe what has surprised you as well?
Grainger's a great company, and it has created a bunch of great leaders that are still there, and some that have gone out and run other businesses. I think one of the biggest pieces I would say that I learned at Grainger is really understanding the customer. If you take a look back, when Grainger decided to break off and have full service and then endless assortment online, I mean, the genius of that wasn't either or of what their customers wanted, it was the and so they built two business units, right, that sometimes competed with each other, but they held their ground, even though it was created some turmoil maybe with the sales organization and other things like that. But it was about understanding the customer, how they wanted to buy, what they wanted to buy. I would say the second thing is data. Grainger is a data
Yeah.
rich company. They use data a lot. And so coming back over to supply technologies, we had incredible data. There was no way to bring it to the forefront. So, we've invested heavily in some capabilities around Power BI, other things to make sure that we have the proper data internally for our team members, but also for our customers. And so I would say those are two of the biggest things. What surprised me, well, you hit on earlier, it was joining a supply chain management company during a very difficult time in supply chain. It
Yeah.
was a crash course for me when, you know, 8 months into it, I was like, what did I get myself into?
That's what
it,
I was
you know,
thinking.
it, so the difference is that MRO is a little different than the business we're in because if I don't serve the line, I shut down lines of manufacturing for our end customers. You really don't do a
Sure.
lot of that in MRO. And so if you don't have the product, and our product lead times can be 40 weeks sometimes on product, right? And so
Mm.
you have to make sure you're buying in advance. And so when steamships were sitting off the coast for, weeks on end, it created a significant challenge for us to serve our customers. So it was a crash
Yeah.
course.
Well, and now you're going into, maybe we can describe it as a $50 million plus investment in the company. That's including this huge distribution center, this hub and spoke model, the ERP, robotics automation, innovation center. I mean, you name it. We have a long list of things. What does that signal? What are you betting on about where industrial distribution is heading, that makes this the right investment for not just right now, but looking forward into the next decade?
So if you read publications, I mean, it's all about AI and how drones are going to be able to do inventory
Yep.
checks in our warehouses.
Guilty.
So we get a lot of questions from investors about the changing of distribution because of AI. So what I would say is we always threw people at problems. We didn't throw technology at problems. So we've kind of changed our view of this and said, hey, we can't keep on throwing people at problems. We have to invest in the technology. And that technology is ERP, that technology is robotics, that technology is other automation. But I think it taught us that we have to have a lower cost to serve with our customers, and our customers expect that. I would also say that between 2020 and 2024, it really taught our end customers that you have to have a resilient supply chain. And so, what does that mean in
Yeah,
today's world, right? Especially in today's world, as we're talking about the geopolitical climate, a lot of people want nationalization strategies of suppliers, regionalization of suppliers. And so I think our end customers, the manufacturers out there, OEMs, said, okay, we need to make sure we have resilient supply chains. We need to make sure we have dual supply chains. And for us, that means that while I may still buy overseas and the cost still hasn't outweighed domestic suppliers, what they want to know is that I have another supplier lined up in case something happens. So I can pull that
okay.
ripcord when I need to. Not that everybody's jumping, because cost is still an issue on some of our items that we still buy overseas. But at the end of the day, it's really about our customers want to make sure that if something happens tomorrow, that we have the ability to quickly pivot and have another supplier in our back pocket that can serve them and it doesn't shut them down. That is what every manufacturer out there today is worried about, and has been worried about for the last 4 years since we've been going through this challenging supply chain world that we're living in now.
Totally. And just the closing thoughts, because there's always a part to the story that's not doesn't fit neatly into the announcement of, the new facility or some investments that you're making. I want to ask you, what has been the thing that you just wish people in the industry understood about what you're actually trying to build right now?
Yeah, I would say the business that we serve in the production environment, our space that serves OEM, it's a hard business. Again, the volatility, you have to stay on your toes, you have to be agile, you have to be able to move quickly, and that is a big difference between kind of the MRO versus kind of the production space that we play in. And I'm not saying that MRO distribution doesn't have the challenge of the volatility, but in our space, that volatility is exasperated, I would say. And
Totally.
and so the learning for us, and I think everybody in our space, is how do you stay agile? How do you make sure that you reduce the lead times in the supply chain? And we are an ever evolving world with AI. How are you harnessing and how are you investing in AI? There are a lot of people that went out of the gates and went big on it and may not have returned. We're very focused on use cases and understanding how we want to invest in AI, but it is a changing dynamic. And I think more than ever, especially in distribution, you have to remain agile.
Thank you so much, Brian. I appreciate you joining the MDM podcast and look forward to what's in store for the company this year and following years.
Great. Thanks a lot for your time.
Well, that's a wrap on this episode of the MDM podcast. Brian, thank you again for joining us and walking us through both the strategy behind this large investment and what it takes to execute a transformation quite like this one. And thank you all for listening to the MDM podcast. For more insights on distribution strategy, technology, and market trends, be sure to visit mdm.com, where you can subscribe to our free email newsletter. See you in the next one.